All good? Thank you. Okay, thank you. Yes, great. Okay, now let's start. Okay, here are some disclaimer. So all the content here are actually only for educational purposes only. So please consult your TR or reminder if you wish to have some advice. Okay. Now, here are the contents for today. Let's get started. So first thing is I'll present to you what is CFD and then how does CFD works and then type of asset classes that we provide in CFD and then why should you trade CFD with us. And then later on I'll guide you to open a CFD account and then we'll end with the Q&A session. Okay. Now first thing, let's dive into CFD. Okay, so what exactly is CFD? So CFD it's a contract for difference where it is a derivative product. So the product's value is dependent upon an underlying asset. So let's say, for example, stocks, commodities, currencies, and market indices. So what you are actually trading is actually just a contract. So a contractual agreement between a buyer and a seller. So the traders pay the difference in price when they open the contract. Okay, so CFD is also an OTC product, which is over the counter. It is not listed on any exchanges and is only traded via brokers like PhillipCapital. Okay, so the last thing is there's no ownership. CFD only provide exposure of the underlying, and you actually do not own any of the underlying shares or commodity when you trade CFD. Okay, let's see how CFD works. Now, here, the basic of buying and selling CFD works similarly to stocks. So you buy at the ask and sell at the bid. So ask is actually the lowest price at which a seller is willing to accept, and then the bid is the highest price at which a buyer is willing to pay. So spread is just the difference between the bid and ask, which is how we use to quote our bid and ask price. Now, so this is the order ticket from our most popular platform, Poem's platform. So for this particular counter, we have an OCBC bank. So this CFD counters actually tracks the underlying share price of OCBC. So here we have the bid and ask price, 14.25 and 14.26. So we will buy at the ask and sell at the bid, simple. So let's say, for example, when you buy 100 OCBC CFD contract, so which means that you are actually buying at the ask price, which is 14.26. So here, you don't actually own the underlying share. You can actually just get an exposure to the price fluctuation in OCBC. So now the difference comes in when you trade CFD as compared to equities. As you can see here, there's the margin requirement of 10%. So this means that you will actually need to have at least 142.60 cents in your CFD account to actually hold this 100 OCBC CFD position. Okay, now let's say for index, so let's say for example here we have an S&P 500 USD1 index. So let's do some calculations. So 1 point movement is this S&P 500 is actually worth USD1. Okay, so let's say price at T0 would be 37,000 and then the index point will be USD1. So let's say I want a long one, which is I'm buying one contract of one CFD contract of S&P 500. So the margin requirement normally for an index is actually 5%. So here you actually use the price of the index and you times the index point and the margin requirement, you need around $2,480 to hold the S&P 500. Okay, so let's say for example, at the future at price at T1, the price actually rose to 38,000. So you just use the price difference and then you times the index point and the margin requirement, and this is how much you have earned. Okay, let's say you have long. So let's say for example, if you are shorting the S&P 500 index, shorting means that you're actually hoping that the index will go down in price. Okay, so let's say the price at the point of time is 37,600, and then in the end, all the calculations is similar to the long one, but let's say for example at price T1 is 38,000. You will obviously make a loss, correct? Because when it increase in price, when the index increase, you will actually lose if you're at a short position. Okay, so you just take the price difference and then you times the index point and the margin requirement, and then you'll get around how much you lose. Okay, these are just a rough calculation of you should get when you trade indices, okay, with CFD. Now, so this is a side note on our CFD chart. So we are actually normally showing a CFD mid price. So actually from the ticker here, you can see there's the bid and ask price. And how we compute the mid price on our chart is by adding the both bid and ask price and divide by 2. So this is the mid price that is shown on our chart. So let's say, for example, a lot of clients asking that why my order is not done when the low is at, let's say, 4.8K, but I actually submitted at around at a higher price at 4.81, let's say. So it's actually because that the client's looking at the mid price and not the bid and ask. So the quoting price is actually different than the bid, yeah. Okay, so this is one thing to know on our chart. Okay, let's explore what type of asset classes can be traded in the form of CFD. So now here we actually have different types of asset classes. We have FX CFD, CFD indices, CFD equities, and commodities. So the first thing for FX CFD, we have our main pairs to exotic pairs, depending on what you want to trade. We have USD, JPY, Australian dollar, USD, and USD Thai baht. And then the CFD indices, we have S&P 500, NASDAQ, Dow Jones also, Nikkei, which is 725, and then we have the China A50. Okay, so for CFD equities or ETF, so we have as much as around 5,000 counters for you to choose from many different exchanges, including Singapore, US, Hong Kong, depending on which type of counter you want to trade. Okay, so for commodities, CFD, we have gold and silver, and also US and UK oil. Yeah, it ranges from precious metals to oil. Now, here for CFD equities, it allows you to get exposure ranging from technology to pharmaceutical companies, which is various sectors and industry. So there's a diverse market just now, as we know that here we can get access to over 8 global stock exchanges. So depending on which market that you want to trade. Okay. Now, so this one, how do you identify which one is our CFD equities on Williams 2? Okay, so this is important for you to know is that here we have 3 different types. If you type OCBC, there's 3 different types of CBC will pop up. So we have CFD, we have DMA, and we have equities. So CFD is the normal contract for difference. DMA is the direct market access, where equities is the normal stock that you normally trade. Okay, now here, let's get into the part where we differentiate what is CFD and CFD DMA. Okay, so CFD DMA is where you participate in the order book of the exchange, where there's actually more liquidity. So traders also experience a more transparent and efficient trading environment. So there's actually access to real-time market depth, and it allows you to see the order book, which is the bid and ask price at different price levels. Okay, that's the market depth. And then there's a faster execution of orders. So your CFD orders actually sent directly to the exchange, and you will actually benefit from the reduced latency and the improved responsiveness because direct market access is your order directly reflected on the exchange itself. Okay, so DMA orders actually based on last time price, which is price for time priority. Okay, so that's the main difference between DMA and CFD. Because CFD, you actually go through to us, where it may or may not reflect in the exchange itself, but DMA is directly to the exchange. Okay. Yeah. So here you can get for commodity CFD, you can get access to the top 3 most traded commodities, which is our gold, silver, and oil. So here our margin can be as low as 20%, and we also offer the standard and mini lot contracts. So what do I mean by standard and mini? So for standard is the gold USD 100, where it's the bigger one, where the smaller one, mini lots, would be the gold USD 1. So what do I mean by that is for every price point, it changes how much does it worth. So each price point can be worth USD 1 or USD 100, depending on which one that you're trading on. Okay. No. So let's say for CFD indices. CFD indices cover a broad spectrum of market, including major global indices. So let's say, for example, for S&P 500. So S&P 500 actually represent a value of a specific group of companies. So it actually reflects the performance for a particular market or sector, as you can see here. Here is the visualization of the company's performance, okay, of the companies that is within S&P 500 index. So we also offer multiple size contract depending on what you want. So we have, especially the Hong Kong, we have Hong Kong Index HKD1 and Hong Kong Index HKD5. So it's the mini and the standard lot lah. Okay, so for index, actually available tool for hedging and portfolio diversification, and also it allows you to spread the risk across different asset classes and geographical region. Okay, so for our indices, the margin is as low as 5%. So which gives you leverage to provide enhanced exposure to the index movement. Okay, now, so here we offer FX trading in the form of CFD, where there are actually up to 38 pairs available for trading. Due to its global nature, its involvement of various financial centers across different time zones, correct? So FX actually operates 24 hours and 5 days a week. Okay, so yes. Next, so here is our two platforms, which is POEMS CFD MT5 and the POEMS 2.0. So how does our FX CFD works? It will be similar to the equities too, just that the spread will be shown in the middle. This is not the middle, but this is the middle. Yeah, this is the spread. So this will be the spread. Unfortunately, our MT5 we do not show you the spread, but we'll show you the bid and ask price lah. Okay, so the spreads are usually measured in pips, which is the smallest price movement in the currency exchange rate can make. Okay, so here is same thing, you buy at the ask and you sell at the bid. Here, same thing. And then we actually offer a mini lot for FX CFD. We do not have a standard lot, but we do offer mini lot because of leverage and all. So mini lot is 10,000. Standard lot is normally 100K, but we are looking into offering micro lots too, but not at the moment yet. Yeah. Okay, so next, why trade CFD? Let's keep this short and sweet. Okay, first thing is this is a summary of why should you trade CFD with us. First thing, both directions. So CFD allows you to go both long and short. And next thing is you can use as little capital because the margin is actually as low as 5%. So next would be their wide range of counters for you to choose from index to different markets of stock counters. And then this CFD also allows you to access to leverage, where there's the leverage from 5 times onwards. Or if you use MT5, there's technically more leverage lah. Okay, so there's also a competitive spread from us, where our spread is actually narrower, and you can actually compare ours to our competitors lah. Yeah. So there are actually various platforms for you to trade also, which is POEMS, Mobile P3, MT5, and Mobile MT5. Okay, now, so here are the few platform features. So at Phillip Securities, we actually offer equities, commodities, FX, indices, trading in the form of CFD contracts. So which is available on our POEMS 2, Mobile 3, POEMS CFD MT5. Okay, so here are the features for our platform for POEMS 2 and POEMS CFD MT5. So for first thing is the commission rate, which the POEMS 2 is standard, but our MT5 which is lower lah. So the commission rate, you can actually refer to our website for more info. So watch list, both platforms also have it. And then the credit limit for POEMS normally is at 200K, but for MT5 there's no credit limit approval for it. So those who want more credit limit and all, you can actually opt for our MT5. Okay, so the counters wise for POEMS 2, there's more, but as of now, CFD MT5 have only around 382, but we're actually looking ways to actually add more counters. So if you want to trade any other counters that's not listed on our MT5, you can just give us a call and we'll see and how can we add that counter in for you to trade. Okay, ledger wise is POEMS is a multi-ledger, while MT5 is actually single. So what's the difference and how do we maintain the ledger is for multi, we maintain your currency in different ledger. Let's say, for example, Sing dollar, USD, Malaysian ringgit, and Japanese yen. But for single, which is in POEMS, which is in MT5, we do not have different ledger. So let's say, for example, in MT5, your margin is in USD. So we only hold the Sing dollar equivalent of the USD. needed for you to actually maintain your position. So let's say for the P&L, everything will only convert from the other foreign currency into SGD lah. Yeah. So technically, everything that you see in MT5 is Sing dollar. Okay. So one-click trading, yes, MT5 we have, points we do not have. So that one we can actually look at our videos online that I've presented on for CFD MT5. So those who are interested can actually go and see. So advanced order types also, we have CFD MT5 has a lot of more different order types compared to POEMS, and the H mode too. Okay, so H mode is providing you the ability to long and short at the same time lah. Yeah, which is MT5 is available. So let me guide you on how do you open your POEMS CFD account. So first thing is you actually need to have a POEMS account to actually get access to MT5 tool. But most importantly, now we have the one click for you to actually directly open the MT5 account. Okay, so new customers, you may actually create an account via POEMS website. You can just visit this poems.com.sg, or you can scan this QR code to actually sign up an account. I think Vanessa, can you send the link to the chat that they can sign up? Yep, okay. I think she will actually send it later on. Okay, now. So next. Okay, so for those our existing customers, so those who wants to opt into our MT5 account, very easy. You log into your POEMS account and then you go to account management, CFD, and then you go online account openings, and then you can actually choose to opt in to CFD MT5, and then this is to choose to opt into CFD and complete the CKA and VIS fact sheet. So this is for our existing customer who already has a POEMS stock account. Okay, so this one is for to open a CFD account. Okay, now there's the internal transfer from stocks to CFD. So if you want to fund into your account, this is for our existing customer. So we can go to account management, CFD, and then you go online forms for withdrawal form, and then you can just input the amount, and then you can transfer into your CFD account, depending. Okay. So this also, it is a direct crediting to our CFD account. So those who already created their CFD, you can actually watch the tutorials on how to direct credit your funds into our CFD account. Okay, so you can actually go to our website payments and actually see. Okay, so now this is our promotion that we are having, where after you actually open your POEMS account and trade with us, this is actually you can get free shares. So you can actually scan the QR code here to read more about it. So let me share more. So let me explain more is about this free share. So you can actually get one share depending on the tier that you hit. So let's say, for example, you only open a POEMS CFD account, then you'll get a free Plantail CFD share. So let's say you open a CFD account and then you trade 1.5 million in CFD contract value, you will get Taiwan Semiconductor Manufacturing. So you'll get this free share. So you do not get both Plantail and Taiwan Semiconductor because you only get one share depending on the tier you hit. So let's say you hit tier 2, you only get this one Taiwan Semiconductor share and not Plantail and this Taiwan Semiconductor. Okay, so you can actually scan this QR code to know more about it. And yeah, I think that's all for now. Any questions? Let me see. Oh, okay, for Desmond, yes. So actually this webinar would be actually recorded and posted on our website. So there are actually previous versions of CFD or about MT5 too, and you can actually welcome to view it on our website. Okay, thank you. Yeah. When we go back to the page before the pay now code, which is before this one, is it this one? So yeah, this one is for our existing customer for internal transfer funds from stocks to our CFD account. Okay, so if you need a screenshot, then you can screenshot this to see how to transfer. And any other question about CFD or how do you open an account? What are the cons or dangers of using CFD? Yes, that's a good question. So for CFD, because we have leverage, so leverage wise can be a double-edged sword. So it depends on your strategy, and actually those traders who are suitable for you for CFD is actually for them to use as a tool for them to hedge their portfolio. So because let's say for example, investor has quite a lot of equities in their portfolios, but they are thinking of using another tool to actually hedge it. But if you were to hedge it using equities wise, you have to pay the full price for it, right? Yeah. But by using CFD, you actually just pay a partial of it to actually get your portfolio hedged. So technically, I can say that CFD can use as an insurance tool, but yes, because of leverage, it can be quite dangerous of when you trade CFD. So it's actually quite important for you to know how CFD works and actually to know how much you can play with and how much of a risk that you're willing to take for CFD. So yeah, so these are the dangers. Yeah, you need to know that. Okay, any other questions? Yep. I'll be here a while and around 5 more minutes, and then we'll see what other questions that do you have. Yep. Hello everyone, is there any other questions that you can actually put in the chat? Yeah, any questions about MT5 or CFD? Okay, yes. Yeah, hold on, yeah. Okay, so the difference between DMA and CFD is where DMA is direct market access, where the orders actually sent through directly to the exchange. So your orders will be reflected on the exchange and you can actually participate in the order book. But for CFD wise, CFD is the normal one where your order will be sent through us and then it might or might not be reflected on the exchange. So let's say for example, we have a few orders coming in at CFD, and then let's say this order actually match with another order. So we'll just match internally and we will actually process internally without having to send to the exchange. So that's that's the main difference between DMA and CFD. Okay. So for DMA wise, commission will be slightly higher because you would need to pay for higher price transparency. So yeah, that's the main difference if you want to understand how it works. Yeah. Okay, any other questions? I'll stay here a while if you have any other questions. Okay, then I think we can end here. Thank you, everyone. If you have anything, you can just call in to CFD or can send us an email. Okay, thank you.